small gap down this morning. We actually touched Friday morning support. Pre-market around 243.12. So look at the size of this pop. 240.70 where we bought, I think, last Wednesday. About $3.70. About $1.30 pull-in, so $1.30.
Difficult to kind of get good size and
this is the first spot to look at in terms of pullback. The next spot is Thursday's big up day. We supported around 242.70s. So those are the two spots I'd be looking at. On the SPYs, IWM, which went from 35 to 41. Had a pull in, so it's had 2 days of pull in now. Actually, now gapping. Really, when it turns, it turns. It's now $3 off the high, so it's retraced half of this move here from high to low. So close yesterday was around 138.68, and breakout Thursday was 137.30. So those are the two spots I'd be looking at in IWM. It's really more volatile than SPYs and a much deeper pull-in, but also a much larger percentage rally off the low from last week.
yeah.
Okay, so a bunch going on again today. Usually what happens after earnings season winds down, you get different very niche sectors reporting and then also some other random news. So there's a few things going on today. First thing is in GIII. So this is they own various apparel retailers or brands. They normally trade under 1 million shares a day. That's almost done 500,000 in the pre-market. So big downtrend with a few bounce attempts all along the way. Most recent one, I guess, was from 1940 to 25. So right now, bid is above this 25 level. What did I think? So they beat by 6%, but what was also interesting, they raised an additional 6% going forward. So it wasn't a one-time anomaly in their view. The way we want to look at this is, okay, 25 should be some real resistance. It printed up there initially, consolidated lower to 24.5, and now it's taking that out on heavy volume. So above 25, I put 26. I think when we looked at the higher time frame, okay, I see why I use 26 here. The high 26s is more resistance though. And 26.5 to 27 is kind of this area right here. 20 after it broke down to the downside from that area, it's 25.5. It had one quick spike here to 26. Sold, spiked up again, sold. So okay, we'll watch 26, but just looking at the higher time frame, it seems like the real resistance is a little bit above that area. But it already is up 27%, so that's quite a bit. I guess the way I look at it is on the open, say it spikes up a little bit more wherever that tops out. If it then starts coming in, I'd want to see what happens here at the 25 level. Does it hold it and kind of make a run up the rest of the day, or does it fail here, start to hold below 25? You get the pre-market support at 24 and a quarter, and then we'll go from there. It should do some good volume today, maybe 5 million shares. Should be 7-8 times the normal volume. Next one is ACOR. This news didn't seem, they're talking about drug data and maybe doing a phase 3 trial next year. Here's the daily for the phase 3 data coming out next year. So we know that this got the kibosh from 26 down to 18 back in March. After kind of basing for a while, then broke to the downside. I think a lot of people would be incentivized to sell this. So it did after the news initially came to 18 in the after hours. But this morning, people aren't even letting it get above 17. I definitely being short on this one. I think a lot of people would want to use this move from 15, 17 to get out. So in the after hours, it was definitely being sold here at 18, came into 1640. Now it's made a lower high. Perhaps right on the open, they'll spike it above 17 to like 1720, 1730. Then it fails, gets below 17 to stay on the short side. It could come all the way back down potentially. Next one is THO. This one, it's gonna be trickier. It's a higher price stock, trades under 1 million shares. The news on this one was they beat by 15%, so it's a big beat. It's up 12% right now. Let's take a look at the daily to give some context. So it was in a really big uptrend with some vicious down. Build this gap here. I guess this is where it's gapping to right now, this area right here. So if we look at it, when it was at the high, some news came out, gapped out to 110.5, and then they crushed it for the next 3 days, right back down to below 100. It hasn't been above 100 since then. This is going to be a tough spot for it here, 105.5 to 106.5. I'm going to put it on the sheet for 106.5, 107. So a little conservative by me there. Right. So I use the after hours kind of high and then the 107 level. But really anywhere in this 106, if it's being sold and you see a failure, there's very easy $3 to $4 down move. And if for some reason they really took profits, you'd be looking at 100 or lower. I wouldn't be trading it on the long side at these levels. The risk reward is pretty awful. And if you look at the higher time frame, there's resistance just too close to where we are in price right here. Fran the man, I like to call the stock. They missed and guided down, but guided in line for the year. Stock has been beaten down. I think it's just a multiple situation now. The multiple is now below 10 price to earnings per share. One thing that stuck out to me was when it gapped down to $11 back in last summer, and it stayed down here for a while between 11 and 10. So might do the same thing today. Come down close to $10, then pop up to 50 cents, 80 cents, something like that. Not really go anywhere. So far, not even really testing the 10. So I guess right on the open, if it popped up the 1070 or higher, I would give it a shot on the short side. It's always tough on these. It wasn't really much of a guide down, and the stock is beaten down already. So you want to be a little bit careful. I'd rather make the play comes in closer to $10 on the open, getting long. We're on a conference call right now. MIK. another specialty. So Fran and MIK are both specialty kind of retailers, smaller companies that like to report on the same day. Small miss, small guy down. So I didn't really see much there. It's already gotten hammered recently. 18. The last time it was down here at 19, it ran up to 24. The other day, it actually took out the low, then reversed up to 20. I guess the way I'd be looking at it, I'd definitely be using 19 as an inflection, which I believe I put on this sheet. For those of you who are newer, inflection means holding below short, holding above long. The reason I like that is obviously bounced here back in February, beginning of February. Then intraday, you can see when it was below there a few days ago, closed above. Next day tested it, it was the low. So 19 is an important level in this. And it's gapping below. So you should be able to use this 19 level, even if it spikes above, comes back down, see if it holds it, or if it fails. Just got to be a little bit nimble on this one. And it's a thicker stock. Normally trades 1.8 million, but today it could easily trade. Why it says it's about 1.8 is it's normal. I've seen doing a lot of 2.5, 3 million share days. Should be doing at least 4 or 5 million shares today, I would think. And then stuff from yesterday. I wasn't around. I had to leave before they opened and just didn't come back. LOXO. We talked about this one having the best potential to stay up a ton. It did bottom in the morning, and then the buyers took control at 68, then at 70. Then it looks like they were buying it at 73. But at the end of the day, it faded to below 70. I continue to use 68, 69 as support. And if I saw it consolidating above 72 again, I would be looking at it on the long side, see if it could take out prior day's high. That might take a few days to happen. PBYI, this one, sellers maintains control. I mean, they started to take control in the pre-market at 100. We talked about 90, seeing if it would bounce off of that. Let's take a look at what it did on the open. So this looks very difficult to me in terms of, on the 5-minute, just a lot of spikes above and below, nasty. There clearly was selling at 91.60 here. Look at how many times a wick came up to 91.60 and then failed. Now the buyers are stepping up the whole time. So I imagine you could short it there. But it is holding above 90. Looks like the cleanest trade happened after 10 o'clock when it failed where the seller was here, got back below 90, came back up and held. I think we talked about 85 as being downside. I don't remember if we used 88. Oop. So the first time it got to 85, it did bounce $4 about, it looks like. The sellers never really relinquished control. I mean, this downtrend never really broke. So I would say today, if it comes back into this 85, 60 area, I would look again to see if the sellers reassert control right here. And it comes back down into the range from the prior few days. Similar to ADI a couple weeks ago. And then HLF. So the interesting thing about HLF is I left up the markup from yesterday's morning meeting in here. I believe we talked about this area here, 70.50 to 71 being of interest. It did pop up there and fail, then started to hold below 70, which we highlighted, and then came into our 68 kind of area from the daily support. So it's a good example. It's a very tough stock, actually. It clicks a lot. But if you saw it right on the open having trouble into 71 and then had the hard down move to 70, that certainly you could fade this little wick pop here as it gets closer to 70.50. And your confirmation is once it starts to consolidate below the $70 and you make it to the play to right here. Other people were obviously thinking the same thing, make the play to 68. The large buyer stepped in there and caused it to spike up $1. And once they were done, came back down. Then at the end of the day, again, another buyer came in, spiked it up to 69. So 69 based on yesterday's price action is the level you want to pay attention to. Support all morning, and then twice it popped up there at the end of the day. I don't know if it's green mark yet. Looks like it closed right at 69. So yeah, it's HLF is for a more experienced trader. You really need to know, kind of have a plan. If you know that the news wasn't good and kind of you think it has the downside to $68 and it's having trouble on those spikes on the open, and you can risk 50 cents or so getting short in the 70-80s with a stop above 71.30 or something like that, and you get the down move below 70. That's kind of the trade. It's very rare. Every once in a while it has a tight consolidation, but that's not normal for it. So as always, be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.